Welcome to this week's market drama. After a tough first week of the year for the markets, we had a rally. S&P was up 1.8%. NASDAQ was up even more, 3.1%. They're essentially flat year to date. Worth noting that Bitcoin was up 5%. And this is after the SEC approved the first spot Bitcoin ETF. When it comes to earnings, it was the unofficial beginning of earnings season with JP Morgan, Citi, Bank of America, and Wells Fargo reporting. Overall, the earnings were lackluster, and I think that definitely kind of took the wind off the market's rally towards the tail end of the wind, but we still ended up for the week. When it comes to economic data, we did have CPI data come in at 3.4% in December from a year ago, a slight acceleration from the last month's 3.1%. Core CPI did continue to slow, falling to 3.9 versus 4 for the prior month. So this was the lowest reading in 2.5 years. But it does show a rate at 3.9% core, still not anywhere near that 2 to 3% that the Fed is waiting for. We did have better than expected PPI data on the producer side. 3 consecutive now monthly declines there. Core prices for PPI increased 1.8%, which is less than expected, below the Federal Reserve's overall inflation target of 2%. So the PPI side of the equation, or the producer side of the equation, is showing kind of within the range that the Fed wants to see. CPI, which is the consumer side of the equation, continues to fall down, but is still at 3.9% for core. This coming week, we have U.S. retail sales on Wednesday, which will give us an indication of how the consumer is faring here in the United States. That's it for this week. Stay tuned for next week.